Far too often as dividend investors, we are totally distracted by a dividend stock's yield. Heck, I'm not even going to lie to you, I'll admit it outright. When I first started dividend investing, I was guilty of doing so as well. Of course, the higher the yield, the more passive income you are ultimately going to receive. So why wouldn't you target higher yielding dividend stocks? And well, logically, it all checks out. I am here to tell you that you really may want to adjust your focus and target dividend stocks that are going to deliver through on reliable dividends for years, and hopefully in all cases for decades. So today, that's our big focus, and with that, let's get right to it. Now, one of the most important questions as an investor to ask yourself, especially as a dividend investor, is why you're dividend investing. Perhaps you caught the dividend bug and you want to simply collect passive income on a monthly basis. Maybe financial independence and the whole FIRE movement turned you on to dividend stocks. Or perhaps you're just at an elder age, coming up on retirement, and dividend stocks, given their overall safety and lower risk, hooked you. Either way, no matter what, you found yourself flirting with dividend stocks. This question then is more important than ever, because depending on how you answer it, you'll actually need to target certain types of dividend stocks altogether. If you are, say, on the younger side, maybe in your 20s, your 30s, or 40s, then dividend growth is actually insanely important. However, if you're nearing retirement, that's not necessarily the case, and therefore, dividend yield becomes a much bigger factor. But regardless, reliability in all your dividend stocks is key, which leads us to question number 2, which is, what exactly does a reliable dividend paying company even look like? Now, personally, I think about 3 pieces of essential criteria in terms of reliability: the popularity or reputation of the company, the management team that runs the company, and finally, or rather most importantly, whether or not the company actually has a clean balance sheet, so little to no debt. Now, if all 3 of these components check out, then chances are you're getting invested into a pretty reliable company. And ultimately, as Warren Buffett always shares, you should be able to not look at the stock market or your investments for a prolonged period of time without panic, because you know that your investments are secured. Now, this leads us to a third question, which is, how long is my dividend investment timeline? Because again, if you're older with less time on your hands and you're actually in need of more passive income, you're going to want to put more of an emphasis or focus on dividend yield. But if you're younger, once again, dividend growth is the answer. So I want to go ahead and present you with a handful of some of the most reliable dividend stocks that you can literally own forever and beyond. With that, first up, I want to go ahead and pitch an easy one with Coca-Cola, ticker symbol KO. Now, this is literally a no-brainer, and usually one of the first dividend stocks all dividend investors flock to because it's easy to understand the business model and everything in between. I just say the name and you instantly probably reacted with fond memories of drinking one of their dozens upon dozens of refreshing beverages. That's what I call one heck of a reputation. But not only that, Coca-Cola literally dominates the globe with a footprint in every nook and cranny of this world. As for their leadership team, standout A+. When have you last heard or seen Coca-Cola in the news or with a scandal? That executive team, mighty clean. And as for their balance sheet, equally as clean. Coca-Cola has just continuously brought in an increase of their assets while keeping liabilities low. But here's the ultimate deal when it comes to Coca-Cola. When it comes to that share price, despite all the mayhem over the years, Coca-Cola continued to climb over 31% over the last 5 years. But now if we zoom into just this year alone, we're up 21% despite all the craziness. Zoom back out with me to see the progress since inception. We see over 5,500% worth of appreciation. That's green on green on green. Is it a buy right now? That's for a different dividend video altogether. But dividend wise, we can click into Simply Safe Dividends to ultimately see a yield coming in at 2.67%. Scroll down to the key metrics, discover a track record of over 104 years, and over the last 20 years alone, an average growth rate of 7% year over year. Now, another similar reliable dividend stock that I think is equally as reliable as Coca-Cola and at the right price should definitely at least be on your watch list is Procter & Gamble, ticker symbol PG, which specializes in a wide range of personal consumer health, personal care, and hygiene products that I'm 100% certain can be found all over your home. These products are organized really into several segments, including beauty, grooming, healthcare, fabric, home care, and baby, as well as feminine and family care products. And the very nature of their product line, unlike Coca-Cola, gives them, I would argue, an even larger moat of defensive positioning, given no matter what our economic conditions are, you're going to continue to need to buy their products unless you want bad breath, dirty laundry, or terrible BO. And we can see a similar historical stock chart here because as Procter & Gamble is up over the year by 18%, over the last 5 years by 43+%, and at a max view, another 5,000% worth of appreciation there. Now, of course, you're investing for a reliable, hopefully growing dividend, which is exactly what you're going to get with Procter & Gamble, delivering through on a 2.29% dividend yield. It's been growing year over year by an average growth rate of 7%, while remaining on a track record here for over 134 years worth of dividend payments. All right, investors, there's 2 out of the 5 dividend stocks that I wanted to share with you today. And before we proceed, it is time for that big ask for you to help me grow this channel by subscribing. Of course, as this channel continues to grow, I am only going to produce more and more content, videos like this for you to consume. It is mission critical content for you to become a wiser dividend investor. And while you're at it, go ahead and tap on that thumbs up button so I know that this content was actually of value to you, and I'll keep making more of it. Now, with that, let's get right back to it here with one of my core positions that has actually been a major player in my portfolio. We have Johnson & Johnson, ticker symbol JNJ, which is really, if you're a dividend investor, a dividend stock that has been and remains a dividend whale, a must-have. Of course, Johnson & Johnson has a hand in the pharmaceutical space while also being a manufacturer of medical technologies. Personally, Johnson & Johnson gets points off for me because it seems like litigation-wise, it's always in the news, especially when it comes to talc, just never ending. But J&J brings much more to the table on the medical front and continues to revolutionize the industry. So we have a winner here. And we could see over the last span of time with J&J over 7,700% worth of appreciation since inception way back when. But zooming into this year alone with some struggles given our economic environment, well, we're still in the green, and I think in terms of trajectory, we're going to be on the up and up. As for Johnson & Johnson and their dividend, we're going to click into Simply Safe, and we're going to discover a 2.96% dividend yield that's been on a 108-year dividend track record and a stronger growth rate coming in at 8% year over year for the last 20 years. So now by this point, I really hope you're actually catching on to all the trends that I'm painting for you in terms of the stocks that I've mentioned and how much of a necessity they really are for our society to function as is, which means you shouldn't be overthinking investing at all, especially if you're investing into companies that are deeply rooted into our everyday lives, which leads me to talk about a personal favorite of mine with Waste Management, ticker symbol WM, which is a leading provider of waste management services. I'm talking about garbage collection, recycling pickup, or just dumpster rentals. Now, this is going to be the input for one major plug I live by: one man's trash is always another man's treasure. And in our case here, we have a dividend treasure. But unless people stop consuming altogether, or we just figure out a way to totally eliminate garbage, then there's going to be waste management and it's going to be in business. Business will be kicking and thriving. As we can see on their income statement, revenue in the billions that continues to pour in, as well as a very clean balance sheet where those assets are far above all the liabilities, with really trucks, truck maintenance, and the alike being their biggest expenditures. But it really all then comes down to us consumers just keeping waste management in business. Now, stock chart wise, again, we have another heavy hitter here coming up on the year by over 16%. Clicking into the 5-year chart here, we see even more greenery, but at a max view, over 3,700% worth of appreciation. And while waste management actually delivers on a smaller dividend yield, we can actually see that that's coming in at just 1.43% over the last 24 years with a dividend track record. We are talking about growth with waste management, as we can go ahead and see a 33% growth rate year over year for the last 20 years. Next up, United Health, ticker symbol UNH, which is going to be the power player on the list today, as we will see in a moment, but ultimately a company that's operating as a healthcare provider in the United States with a lackluster business over patient healthcare system in the US. Well, I'm just saying that it's really going unchecked. I don't think United Health is really going to be out of business anytime soon, and ultimately over the span of time, a power player like I mentioned. Now, it will ultimately come in with a lower dividend yield, as we're going to see, but if you're younger and you're looking to capture more growth and total return, this dividend stock needs to remain on your watch list. After all, we're going to see that year to date, the stock has already climbed by over 12%, but over the span of time has launched by almost 500,000%. And in terms of a small but mighty dividend, that yield is currently coming in at 1.39% while maintaining a 31-year track record, though delivering through on a powerful growth rate at 41% year over year over the last 20 years. Now, investors, these are just a handful of some of the most reliable dividend stocks that you can buy and simply hold forever. I'd love to know your thoughts on these dividend stocks, or which ones that you'd actually pick out to be the most reliable dividend stocks. So comment down below with all your thoughts. Most importantly, you can disagree with me. I love when people do that. Moreover, more insights right here, so check into this video, but definitely be sure you're subscribed to the channel before you click away.